What's up, everybody? Welcome back to Saving with Savi. It's your boy Savi B, and here we are. We're going to talk about what is, and specifically today, what is a dividend. So let's get into that. But before we get into that, I have a little disclaimer. I am not a financial professional, and this is not intended to be financial advice. If you need financial advice, please seek a duly licensed professional. This is hopefully taking a word that means nothing to you and making it mean a little bit more. First, let's get into what is a dividend. A dividend is a sum of money paid regularly, typically quarterly, by a company to its shareholders out of its profits or reserves. Basically, if you own a stock, it's a cash payment. Now, when you get that cash payment, we'll get into a little bit later, but that's what a dividend is. A dividend is a company working and paying you. So, in other words, a dividend is literally just cash paid by a company to an individual. Why do companies pay a dividend? Companies that pay a dividend have stable earnings, does not need to reinvest a lot into itself. So it has excess cash on its balance sheet, and it would like to pass some of that value on to the shareholders. Some of these things do help companies' stock price as well, because if you have a consistent dividend cash flow, investors prize that, especially people who like to invest in dividends, right? I'm not going to invest in a company that rarely pays a dividend because I like the excess cash. How to tell if a company pays a dividend? This is the most easiest, simple, basic thing. You go down to the section in your brokerage. Well, first you look at a stock, right? Then you go down to the section where it says stats. And you have all your basic jargon. The last one is going to be div/yield. That's the dividend yield. It's basically a percentage of the current stock price. So as you can see, I have the Vanguard Total Index Fund, and it pays a dividend of 1.32%. Now, this is at the current price, and I do believe it is a trailing dividend yield. So based on what they paid previously, this is forecasting what it's going to look like in the future. If there's no number there, the company doesn't pay a dividend. Like Uber. And not paying a dividend is not a bad thing. As stated in the previous slide, Uber probably needs to reinvest a lot in itself, in research and development, making the app better, expanding business, things like that. So it has better opportunities to reinvest the money that it's making, if it's even profitable. That's another thing as well. I mean, you can't pay a dividend if you're not profitable. And I don't believe Uber is. But this is just one of the many indicators that you should look at, research in before you purchase a stock. It's important to understand what you're buying, because if you don't know what you're buying, you could be buying fool's gold. So the dividend frequency is basically how often a company pays a dividend. And it really is up to management. There's really no rule on what a company can pay and when they can pay. Most commonly, they decide to pay quarterly, so every 3 months. It's in conjunction with earnings, with cash flow reports, and forward projections. So it's basically they're going in for a business checkup quarterly, let the shareholders know what's going on, what they think they can do. And then, you know what? Because they have this boring meeting and you're a shareholder, they pay you to come because they pay a dividend. That's really it, if you want to look at it that way. So there are monthly dividend paying companies. As you can see, we have Realty Income, which brands itself as the monthly dividend paying company. Isn't that amazing? We have AG&C Investment Corp, and we have Stag Industrial. Here are some of the most common dividend frequencies. Quarterly, we have AT&T, Johnson & Johnson, JP Morgan Chase, Coca-Cola. The list goes on and on and on and on. So basically, if you look at any dividend paying company, it's gonna be quarterly. And we have semi-annual dividend paying companies. These companies pay twice a year. There's no reason to choose either or. If you want to pay monthly, if you want to pay quarterly, semi-annually, it's really up to the company. And it just determines their business, really. Because, you have to build up the cash flow to pay to the shareholders. But with the semi-annual, you see Barclays, Canon, Silvercorp Metals. They all pay semi-annually. I believe Disney, when they did pay a dividend, it was semi-annual as well. And then we get into special dividends. Special dividends, as it sounds, is special because it's not factored in to the normal dividend. These companies like Costco, let's get into that. So Costco increased earnings per share in 2020 by more than 9%, which prompted the company to announce a huge $10 per share special dividend. So this was included on top of their normal dividend. They made so much money, they were like, we don't need this. Shareholders, here's some extra cash for you. Thank you for believing in us. That's really it. If you look at Wingstop, Wingstop killed 2020. Overall sales improved by 25%. Domestic same store sales increased by 21.4%. Adjusted net income increased by 49%. And Wingstop raised its payout by 27%. That's the normal dividend. And announced a $5 per share special dividend. So it increased its normal dividend because business was so good. And it decided to pay out a special dividend because it had more cash than it knew what to do. And the best use of that cash was to return it to the shareholders. I hope this was informative. And I hope you learned a little bit about dividends. If you want to see more videos like this, go ahead, give me a comment, give me a topic, give me a word that you want to learn something. Thank you for watching. I hope you have a beautiful day, and I'll catch you on the next video.